Many of you have asked me for an update on SOFI stock. The stock is up 120% year to date. I started buying the stock at $14 in February, and then the stock crashed 45% after I bought it to $8 per share. So I dollar cost average down, built up the position. Now I'm up around 120%. I talked about it many times on YouTube, and I told you guys, and I was pounding the table, that it was the best growth stock to be buying. The sentiment was bad because Robinhood was supposedly gonna kill the SoFi business model, and I told you guys that was not gonna happen. It was massively overblown. I've been so far right, and SoFi has done really well. And I always talk about stocks I'm buying on YouTube. So this time it's gonna be a little bit different, and I'm gonna tell you why. I'm trimming SoFi at $31.50. Today, I sold 15% of my position. I did not sell my entire position, but now SoFi is up 120% for me in like 8 months, which is an amazing return. And I decided to trim about 15% of the position. I'm gonna tell you why and give you an update on the earnings report. So I read an evaluation. So I really hope you enjoy it as always. Now, the earnings report was absolutely stunning, much better than I personally expected. Revenue growth was 38%. This is insane. It was a reacceleration from 2024 and even from 2023. I was personally expecting 28 to 30%, but 38% was beyond my expectations. So I'm very happy to see this number. Adjusted EBITDA margin was 29%. It keeps on improving every single quarter. Net income right now, the net income margin is about 15%. It was 9% in 2024. It's now 15%. That was a massive expansion. So total members for SoFi, they're 12.6 million members. So they increased their membership by, I believe, 900,000 people quarter on quarter, not year on year, guys. Quarter on quarter. They started the year with around 10.1 million members. Now they have 12.6 million members. And the adult population in the United States, I believe, is 240 million people. So they're not even within 10% of their total addressable market. So the runway for SoFi is huge, and I'm very excited about the long term. For total revenues, again, it was really amazing, 57% in total. Now, the fee-based revenue, which what I really like, and I told you guys, if you're invested in SoFi, you're mainly betting on the fee-based revenue eventually becoming 90 to 100% of total revenues. Now, this is a game changer because SoFi, before, they used to hold most of the loans on the balance sheet. Now, they no longer hold most of the loans on the balance sheet. So whenever you apply for a personal loan on SoFi, you're applying for it on SoFi, but SoFi is not holding the loan. Another third party like Blue Owl Capital is holding the loan. They're taking the credit risk of you not paying, but SoFi is collecting origination fee for hooking you to the third party, and it also collects servicing fees, recurring fees, whenever you're paying your loan every single month. So this is a much higher margin, and it's more capital light, and it's much more efficient. This is like the Robinhood business model, you could say. And SoFi is implementing it. And this is why margins are exploding. Now it's 43% of total income. It's up 50%. And it's going to eventually expand to 60, 70, 80, potentially 90% of total income. And this is very exciting. And the company, of course, has raised guidance to 37 cents. It was 31 cents last quarter. They raised it to 37 cents. There's two amazing catalysts in the near term for SoFi. The first one is crypto, where the company is re-entering crypto in a major way. It's going to be the first national bank where customers can buy, sell, and hold crypto in their account. It's going to be a game changer, and a lot of people will potentially be interested in holding crypto for the very long term. The second one is a potential S&P 500 inclusion. SoFi has been rejected, I believe, 3 times so far. A stock that I own, which is Robinhood, when it joined the S&P, the stock exploded, I believe, 16% overnight, and the next day it opened up 16 or 18% on the day. So this is an amazing catalyst for SoFi, where if it joins the S&P 500 and a lot of those funds will be forced to buy SoFi stock, the stock could potentially be up 10 to 15% the next day. Now, I'm not sure if this is going to be sustainable or not. For Robinhood, it was sustainable, but this is an amazing catalyst for SoFi. Now, you may be asking, if you're so bullish on SoFi, why are you trimming? Well, I'm a long-term investor and I believe in the long term. But whenever something gets fully priced, you could say in the short term, or it gets priced on the best case scenario, and it becomes a large percentage of my portfolio, I believe it's a matter of discipline for me again to start trimming the position. So SoFi right now, it did put up amazing numbers, but it's trading at 70 times 2025 earnings. So 70 PE ratio. Okay. Now looking at 2026 guidance, the company has 55 cents to 80 cents in earnings per share for 2026. Okay. Now we're going to do a very basic calculation. I'm going to take into 80 cents, which is the best case scenario. And 80 cents from the current guidance of 37 cents would be 115% earnings per share growth. So with those estimates, we're betting that SoFi is going to grow 115% in earnings per share in 2026. This is, again, very optimistic, guys. Now, if we're putting up those assumptions and we times the 80 cents by 40 PE, we get about $32. SoFi right now is trading about $31, $31.50. So we're paying 70 times 2025 earnings, or 40 times the higher end of their guidance, which is 115% earnings per share growth. And we're paying 40 times that for 2026. So I believe SoFi in the near term is somewhat expensive, or you could say fully valued. Now, over the next 5 years, the CEO gave a presentation at a conference. I believe he gave it in Q2. And he gave some interesting insights. And he said, as we think about earnings potential, someone asked the question about 55 to 80 cents in 2026, and why such a big range? You can imagine the 80 cents being a scenario where our growth slows more than we would like. And it's going into beyond 26, and it's now in the low 20s, and maybe going into the high teens. So if SoFi was able to achieve 80 cents by 2026, the growth will likely be slowing down. And it's mainly going to be after 2026, more of a revenue growth story, not a margin expansion story. If you look at SoFi's current net income margin, and I can put up the chart over here, they're around 15%. They already jumped from 9% to 15% net income margin. Normally with fintech, it's about 20% to 25%. So if SoFi can grow 115% to 80 cents by 2026, they're likely somewhat maxed out on their net income margin. So it's not going to be as easy for them to grow in a major way in terms of earnings per share. So it's going to be mostly a revenue growth kind of story. So this is my evaluation model on SoFi over the next 5 years, and I'm going to share it with you. I put up 80 cents for 2026, what we talked about, which is 115% growth from the current of 37 cents. Again, the best case scenario. Then I put up 25% growth in 2027, which I believe is fair, then 20% in 2028, 20% in 2029, 20% in 2030, which I personally believe, again, guys, is like the best case scenario for 20% growth, given the net income margin is already 15%, and it will likely be 20 to 25%. So it's not going to be as easy to expand earnings per share, and it will most likely be a revenue growth story. Now, the PE ratio, I put it at 40 times. So this is 40 PE as an exit multiple, and it might seem optimistic, but I believe SoFi will likely deserve that because they will have higher net income margins as they go along when they increase their fee-based revenues. So this is, again, the best ever case scenario, 80 cents and 40 PE and everything. I'm getting $68.73, which is about 122% on the upside, or 17.3% annual return. Now, this is actually not bad at all for a company. Normally, I look for 15% annual return with most stocks on the base case scenario. But this is the best case scenario. I would likely be expecting, 20% a year, 22%, 25%. But here on the best case scenario, in my opinion, I'm getting about 17%, 16% annual return. So for me personally, I'm not selling SOFI because I think I could be wrong. Crypto could expand their growth in a major way, and I could be wrong. There's a lot of ways where I could be wrong and SOFI could keep growing, which is why I have not sold my entire position. But I believe it's prudent to, for me to take some profits, you could say. And I trimmed 15% of my position. And for me personally, if SOFI goes back to $25, so $25, $26 range, which it was there not long ago, I think 25, 26, it would make a lot of sense. If I'm paying 40 times 2026, it's $32, and I'm paying $25, $26 per share, maybe $24, but at least 25. To me, that would make a lot of sense to be dollar cost averaging up on SoFi. But at $31.50, I mean, we could keep going higher in this crazy market. But to me, the risk reward is starting to not be as favorable. So I decided to trim the position. And again, sometimes I could be bullish on the stock and I love the company. But at the same time, if it gets overvalued, I could still, be bullish on the company, but be disciplined. I don't marry any stocks and I don't have any feelings toward any company. I don't like to have like a cult following or a cult show where I only talk about the positives and I don't talk about the negatives. So I always like to challenge myself and look at all perspectives amongst my investments, because I always want to make sure that if I'm doing something wrong, if I'm missing something, so I can notice that before it becomes a mistake and then I'm caught up in not a very good situation. So this is what I wanted to talk about today. And if you're interested in those charts that I'm showing you about the total members, which not a lot of companies have such charts, if you want to try it out, they give you 2 weeks of free access for Fiscal.AI. You could find the link down into the description. But thank you again very much for watching. I hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.